Hello and welcome to Business Rescue with Begbie's Trainer, the podcast designed to give you advice, reassurance and assistance if you're a business owner struggling in these times. I'm John Mellis, and as ever, I'm joined by an expert in the field of business recovery and restructuring. He's a partner at Begbie's Trainer. It's Gerald Krasner. Hi, Gerald.
Hi.
Ready as ever to help the masses?
Oh, yes.
This one is all about when a business can't go any further and what happens at the end of the road. I suppose the most obvious question to start with, Gerald, is how do you know you've reached that point, the end of a business?
Well, I will answer that in a minute, but I'd like to say in the last week, 80% of the calls I've received are to do with businesses that most likely will not survive. Things like pubs, where a small drop in turnover because of the margins just wipes out any profit. So I think today is an important one. And the question you asked me is, how do you know when a business has reached the end of the road? Well, this brings in what I call the mental health aspect as well at this stage, because a lot of people who phone me can't sleep, don't know where to turn. And that's one of the signs that a business has reached the end of the road. It's not that the business can't be rescued, it's that the individual needs the release from the mental anguish. The other sign is, in today's world, cash is to some extent king. Without money, very hard to rescue a business. You can't do it on promises. So what I try and do is extract from people who phone me, what is your business? Why do you think there's no future in it? How do you feel about trying to rebuild it, and put all that together and come up with some sort of answer? And that hopefully will assist, because just the fact that they've talked about it is the first start to recovering the mental anguish. Because I have one saying, whatever you do, if you follow my advice, I guarantee that 6 weeks from now, you will feel better, even if the business doesn't survive. And if you don't agree with me, you can have half your feedback. Nobody's ever claimed the feedback.
The mental anguish, obviously, one of those warning signs. It's when you talk about it there, it sounds similar to something like realizing you're an alcoholic. It's about admitting it to yourself almost, that the business is there. So that's one of the warning signs. Are there other specific markers along the way that you can look out for?
Yes, certainly. Some people actually do recognise before they even phone me that it's come to the end, and that they'd like advice as to the best way of dealing with the problem and burying it to some extent. The other way is I start with my blank piece of paper and I start asking them, how much do you owe? How much do you owe creditors? How much do you owe the VAT? How much do you owe the bank? What's your redundancy bill like? And I add it up, and I'm quite good with figures. And I say, you realise you owe £500,000. And suddenly you can tell they didn't realise they owed they thought they owed 100, 200,000. And that brings them to a realisation that they can't trade out of it. They have to find the best way out of the problem, because the anguish of the letters arriving every day and the phone calls is getting too much. It's affecting their relationships at home. And my job is to give them alternatives to the solutions. There are always more than one solution, because one solution is to do nothing, in which case the problem just continues.
Yeah, and we'll get on to the other solutions in just a moment. You mentioned there, you totted up the figures and got to 500,000, and then another penny dropped for the person sitting in the chair opposite you. But presumably there are other business owners who will just bury their head in the sand until the last possible moment. And how far will they go before you have to try and find a solution for them? Where will they stop?
People like that don't phone me. They've gone too far down the road. It's like, as you said, an alcoholic. He's gone too far down the road. And the thing that will jolt them out is receiving maybe a winding up petition or a bankruptcy order, and suddenly they have to do something. One of the signs is there's a drawer in the office which is full of invoices and unopened envelopes. That's a very good sign that the business is gone.
You mentioned there are always options, there are always solutions available. Even though you're at that point, then presumably there's action you can take to control how bad it could end up being. Is it just a case of damage control at that stage?
The first thing I say is, do you think you've done anything wrong at the moment? And most people will definitely say, no, I've done everything I should. I've done nothing wrong, even if they have. I then say, well, if you take the advice I'm going to give, part of my jobs is stopping you stepping over the line where you will do something wrong that will come back and bite you in 6 months' time. You must be realistic. Based on the figures you've given me, I'll put it all in writing, but basically we have to have a stop scenario. You have to make a judgment. Do you want to start again, maybe buy some of the assets back under an agreed formula, or do you just want to get rid of it and get on with your life in another area?
So presumably you're talking about the start of various processes. Now, there are a few available, I know. Does it differ if you are, say, a sole trader to if you're a company?
Yes. Completely different procedures for limited companies and what's known as LLPs, limited liability partnerships, compared to a sole trader or an ordinary partnership. Completely different law, completely different rules, similarities, but not the same.
Okay, well, you need to take me through these because we need to spell it out for people that are listening to this. So where do you want to start? Do you want to start with the company or do you want to start with the sole trader?
Companies are more prevalent, although I think individuals could become more prevalent. If we start with a company, and let's say we're going to ignore the do nothing option,
okay.
There are, in my opinion, 3 formal insolvency procedures. The first one is what's known as administration. This is where the company is insolvent, but at the root of the company is a viable business. So it owes too much money, say. But if you could do the surgery and get rid of the past, you can sell the business for a future which will employ people, which will also trade with creditors and pay its way. And to do that, as I say, you have to be insolvent. It's a court-led process. You appoint administrators who then go about dealing with the sale of the business, sometimes through what is known as a pre-pack, where effectively a marketing exercise is carried out and the deal is agreed before the administrators are appointed. We're appointed at 2:00 and at 2:05 we sell the business. So we're in and out, and the new business can go forward, and we deal with the rump that's left behind. That's a very complex process now because it has been abused in the past. So if anybody wants to go down that route, they've definitely got to take specialist advice from somebody like me to comply with the regulations. Otherwise, the whole thing can be overturned. The second alternative, which is where the company has no future, is liquidation. That can either be done voluntary or it can be done through the courts under what's known as compulsory liquidation, where the court's involved, the official receiver's involved, and they may appoint somebody like me to deal with it. That's a more straightforward process. Your actions over the last 2 or 3 years will be looked at to see what you've done. Have you run the business correctly? Have you taken out personal monies that should have stayed in the company? Just to give you an example, at the moment, I'm hearing stories where the government have paid furlough money to companies. They paid their staff, but they haven't paid over the pay-as-you-earn element. They've retained that in the business. Now, if that business goes bust, you're going to be asked some very awkward questions.
So strictly speaking, are they breaking the law at this point, or are they just stretching it?
I think if you don't pay over the pay as you earn that the government has given you, I think there's an action for what's called misfeasance that could be brought. It depends how much we're talking about. Hundreds, thousands, tens of thousands. It varies. So that's the second process. The third process for a company is what's called a company voluntary arrangement. This came out in 1986, wasn't very popular to begin with, more popular now. And basically, it's a private arrangement between the company and its creditors. You write a proposal, you send it to all the creditors, and if 75% by value agree the proposal, it's binding on everybody. Typically, a voluntary arrangement would be over a 5-year period where the company makes monthly contributions into a pot of money, which is administered, and a dividend is paid to creditors. So those are the alternatives for a company to consider. And there's lots of information on the net as to how each process works. But my view is, if you're seriously considering, although you'll have read how the process works, you want to know what happens in reality. Speak to me or somebody like me.
I'm moving on for the sole trader.
Sole trader is a different, apart from doing nothing, it's either bankruptcy or what's known as an individual voluntary arrangement. Bankruptcy is a process which again is through the courts. You can make yourself bankrupt for a few £100. It goes to the official receiver. He deals with everything. And after a year, you automatically come out of bankruptcy, providing you have cooperated and all your debts are wiped out. However, the administration of the bankruptcy will go on. And one of the things that has caught a lot of people out is where a house that was in joint names is put into the wife's or partner's name before, and a year later they go bankrupt. That transaction will be overturned. It's known as a transfer at undervalue. You have received no value for that transfer, and we could go back 5 years in case of associated parties. So even if you're going bankrupt and you've got family assets, once again, take advice as to whether this is what you should do. Individual voluntary arrangement is like a company. You write a proposal, you agree with your creditors, and maybe they'll get 50p in the pound of their debts over 5 years. There are other things like debt management, but that doesn't get rid of the debts. I'm talking about getting rid of the debts in the plans that I'm talking about.
When you're talking about the individual voluntary arrangement there, is it again 75%? Is that the magic number that you have to reach in terms of approval?
What it's called, 75% of all creditors and 50% of non-associated creditors. So if your wife is voting in the first vote, she can't vote in the second vote. You've got to pass both votes. And I think it would be useful for me to give what is the definition of insolvency under the Insolvency Act. Many people think they know it, but they're not sure. There are two parts to the test. One is if the liabilities, that is what you owe, including contingent liabilities. Now, contingent liability is something you may or may not owe. Somebody's suing you for money, it's arguable. That's taken it. If that is more than your assets, you are insolvent. Secondly, if you can't pay your debts as and when they fall due, you are deemed to be insolvent. Now, it's not passing one test, you've got to pass both tests. And if I think of the number of people that have had to make arrangements with the tax man before going bust, that is a definite, you're already insolvent. The fact that you can't pay that tax every month for your employees shows the business is insolvent.
It sounds to me, just from what you're saying there, that most people believe that the second one is what they have to meet, and they're not worried about the first element.
Well, they may think about it, or they may say, look at my accounts. my assets are more than my liabilities. And I say, yes, these accounts are last year in October. Let's look at it now, because now is the time. You had plant and machinery in at £50,000. What's it worth today? 10? Let's adjust your balance sheet to reality.
Taking the template of these processes and how they affect individuals and companies, how do you think that's going to affect companies coming out of lockdown? Where do you see specific businesses filtering into, if you like?
I think it's fair to say that a lot more businesses are now insolvent than they were in January. The question is, have they got a reasonable prospect of trading out of it, bearing in mind the government support through loans? If they have, and they put that plan on paper, then I don't think they can be criticised if in a year's time they go bust, but they kept to the plan. So each case look at separately. My advice yet again is, when's the best time to talk to somebody? You know the answer.
Yesterday, yeah. Now, it's not just finances we have to consider. There's the human element as well. You mentioned that. How can staff or owners be affected? What's the easiest way to get through this process in that regard?
Well, it comes back to talking to people and finding out the solution. 2 examples. I've got a friend in Leeds who's been in business 20, 30 years. I asked him how he's doing. He's got part business on the net. He says, do you know something? I'm sleeping so much better because I'm not worrying about my business. And that sums it up. Another guy was on the verge of a nervous breakdown when he came to see me, in my opinion, was emailing and phoning me 6, 7 times a day with questions, which I don't mind because that's part of the service you have to give. It went through his voluntary arrangement at the second try because we had to modify it. And he came back to me ever so grateful. He says, I'm now an expert in voluntary arrangements. I understand them. And I'm feeling so much more positive. So although I am not a counsellor, I'm not a psychiatrist, I'm not professional that way, I do know that helping people resolve that problem is a positive step.
Are you aware of any organisations specifically for these situations that people can turn to? So, for instance, if they feel their mental health is being affected because of a financial situation like this?
Well, I have had cases where people have spoken to the Samaritans, and that's real desperation when you're at that level. There's citizens advice bureaus. They're not open at the moment, but I'm sure you can contact them. But if it's financial, you have to come to somebody who deals in the problem. And that's somebody like me. That's the best thing. I'm not the only IP in the country. There are firms all over the place, but we operate throughout the country. And I'm looking at a job in Oxford at the moment.
Getting back to this situation, if you talk about do's and don'ts of this particular part of a business, what are they?
Well, the don't is don't do something and then phone me up and say, is it all right? I've done this, because it's a bit late in the day. You'd be amazed how many people do. The do is always speak to somebody, a lawyer who knows what they're doing, an accountant, an insolvency practitioner, and take advice. That's the biggest do of all. Don't start taking money out of the business unless somebody's written to you and said, under this scenario, you can pay your wages. And the don't is, don't think you know the answer. Write down your questions, because people always have questions. If you get them answered, you can formulate whether you have a chance of going forward.
When you're in this process, whichever of them you happen to be in, I imagine it unfolds over a period of time. Is it A, okay to talk to somebody else about it? And B, would you advise making this public, if you like?
Well, you're not making it public, are you? Yes, it's okay. It's always okay to talk to people who are specialists in certain areas. when somebody comes to me and we do this process, I don't talk about it. We have a code of ethics we have to live by. The only thing that's public is there'll be a record of company's house that a company is in administration or a company voluntary arrangement, or there'll be a record at the Register of Individual Voluntary Arrangements in Birmingham. But we don't publicise it. The press might publicise well-known names, and then we get phone calls. But other than helping people, we won't talk to the press on the phone.
Yeah, but in general terms, my company is in this position. Is it okay to tell other family members? If it's not in the public domain,
is it okay to tell other family members
or friends, or whatever?
That will make you feel better, but. And you might go to borrow some money. We may tell you to go and talk to them. Circumstances will change because sometimes you've got to make a decision to make people redundant or not make people redundant. And I would say if you speak to people before you've made that decision, it will get out, and that can spoil everything. Make your decision. Speak to your partner by all means. Speak to us. When you've made your decision and implemented it, by all means, speak to who you want.
Now, one of the terms that I keep hearing about in regard to this part of business is phoenixing, or to be a phoenix business. Can you explain to me what that is? Because I don't really know.
Right. Phoenix was something that happened before 1986. It still happens, but it changed. Under the old system, you'd have a company called ABC Limited. That would go bust, and the next morning there'd be ABC UK Limited doing exactly the same thing, and that'd go bust, and then you'd have ABC Northern England Limited, and the company kept rising from the ashes. Under the rules introduced, and I won't get too technical, if you are ABC Limited and you then form a second company called ABC UK Limited, if you don't deal with it correctly and that goes bust, you are personally liable for all its debts. The way round it is you can make an application to the High Court right at the beginning, or you can get the approval of the creditors who lost money in the first company. If you don't, you need a specialist lawyer to do either of these. But beware, if you keep forming companies with similar names, you will get caught. Even if on the face of it, the director and shareholder are different people. If you are a shadow director and seen to be behind the company, you will be personally liable for all the subsequent debts. So it's become less and less relevant because a number of people have been caught out on this.
In previous podcasts, we've spoken about going down this road and and trying to rescue businesses. It may be that you had a really successful business until coronavirus, and then this pandemic hit, and it's changed everything, as we've said in the past. Coming out of this, can you start up again straight away?
Well, number one, you can't start straight away because you've got to form a new company and get a new bank account and VAT number, and that takes weeks today. But going back to the question, it may be that you don't need to start again. It may be that this is a restructure rather than finishing the old company. That we come in, we look at it, we identify which bits can't continue, and we go to the creditors and the bank and say, rather than a formal insolvency, we want to do X, Y, and Z. We want to restructure this company. We want to pay these debts over a period. If the bank is a major player or accredited, we may give you a little bit of equity as a thank you, and then the business can go forward without any major surgery. So in those instances, that is not formal insolvency.
Potential barriers then to simply killing off one company and starting another?
Well, there's the Phoenix syndrome, which I've already gone through, which is using the same name. But if you kill off a company and I go and I'm appointed to look at it, have you taken the goodwill? Have you taken any intellectual property? Have you taken any stock? These things have to be paid for. And if you don't pay for them and do it under a proper process, then the liquidator will come after you, or should come after you. And
Okay.
will insist.
With all that being said, then, how do you go about starting the process of closing a business?
The first thing to do is have a conversation with the insolvency practitioner. He will make certain notes, he'll ask you some questions, he will give you advice, which he'll then put in writing, that the best thing to do is put this company into liquidation. He'll send you a standard engagement letter, which ours runs to about 6 pages, which tells you how it works. It gives you a fixed cost for the initial work. You sign that, and from then on, we take it on board. We send you a list of questions. We prepare a report for creditors. We convene a meeting, or we do it by resolution. We send everything out, and the company's then in liquidation. All phone calls, all aggravation is diverted to me.
I was about to say that sounds like the period where I start sleeping better.
Well, you'd sleep slightly better, but you sleep really better when we've been appointed and you can see you're never going to have to deal with this again.
Okay, let's recap, Gerald. We've been looking at when a business hits the end of the road. What are the specific takeaways on that from this podcast?
Well, I think the summary is, if you're in doubt, take advice. Take advice this afternoon, tomorrow morning. Be realistic. Make sure when you telephone me or somebody else that you have some idea of how much the company owes, what assets it has, and whether you think the business can happen in a new form, or whether you just want to walk away from it. Those are the things we need to know.
My thanks, as always, to Gerald for joining me on this episode of Business Rescue. If you do need help, Begbie's Trainer is there for you with experts in business restructuring, as well as closure options and financial options. They have 78 offices across the UK. And if your business finds itself in need of help, you can contact Gerald directly. His email is gerald@businessrestructure.co.uk. That's Gerald, Gerald, at businessrestructure, all one word, .co.uk. Now, please remember to rate, review, and subscribe on Apple or wherever you get your podcasts. And of course, you can follow us on social media and keep up to date that way. You'll get us on Facebook at Business Rescue, Twitter at Business Rescue 6. That's the number 6, so at Business Rescue 6 on Twitter, and on Instagram at Business Rescue Pod. Or if you prefer to watch us, we have a video version as well, which you'll find on YouTube. You can get all the links you need on our social media. Good luck with your business, and we'll see you next time on Business Rescue.